Welcome, 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 everybody. We're going to get started here in just a second. We want to give people more time to get up in here. How everybody doing today? Oh, you know what? Sorry.
Fine, sir.
Okay.
Doing good. How are y'all doing?
Great. We woke up today, right?
That's right.
We're going to give it a few more minutes, a couple more people gather up in here. Can everybody see my screen?
Yes.
Okay. All right. Just so.
Also hoping this time is an optimal time for everybody. I know a lot of people are working, so during the week, like weeknights, probably isn't the best time for people. So yeah, hopefully today was a good day.
Sir, yes, sir. All right, so it's 2:02. Without further ado, we're gonna go ahead and get started. So, welcome everybody. This is the Futures Connect. My name is Crypto, known in the trading world as Crypto. I got my partner here, Next Trade Lou,
Yes, sir.
and together we form the Futures Connect. We form this community and trying to build this community so we can inform other people on the education of trading in the futures market. The futures market is a stock market, a part of the stock market, and we'll go into detail with that. But we just want to formally welcome everybody to this webinar. It's our first webinar, so we appreciate everybody joining. All right, so the agenda for today is going to be for an introduction to the futures market. And after we do the introduction and like an overview of what the futures market is, I know in the group we had a couple of people that needed some assistance with setting up their platforms, so on and so forth. And then if we can, we'll do a Q&A at the end. All right. Any questions, just put them in the chat, and then we can go back and check them out, and that's how we'll start our Q&A. All right, so mentors, of course, me and Lou. All right, so for me, I was an early participant in the cryptocurrency market, which is where I got my name from. I used to dibble and dabble in a little bit of crypto and a lot of the ICOs that used to happen back then, around the time where Bitcoin was probably about 1,200, 1,500, somewhere around there. I used to try to get people to get in it, but was unsuccessful. And now you can see Bitcoin, I think, topped at what, 70 something thousand. So just a simple investment back then could have yielded you a great return. So back then I started to become aware of a lot of the crypto coins and stuff like that. And I also kind of fell victim to a lot of the crypto scams that was going on, which sparked interest for me to look deeper into trading and trading these markets, even though it took a little bit of while after that. But it definitely sparked my interest. So in 2020, with the pandemic, I started to want to detox my social media. And I wanted to get more into business, invest in things that I can do to possibly make more money, have more streams of income, so on and so forth. So, Lou, you got that? All right. Yeah, so on and so forth. So I started with the traditional buy and hold. I was following a group of people called Earn Your Leisure, and I got introduced to a guy named Wall Street Trapper, which got me into the buy and hold. I would buy and hold little stocks, fractional shares on Cash App, actually. Um, a lot of fractional shares on Cash App. And not knowing anything about the markets, the first thought process was I want to make some money. But because of the pandemic, we know everything was crashing. So I thought I was buying at the low, but as we know now, it got much lower. So out of fear, I sold for a loss just to watch the markets go skyrocket a couple months later. So started with the stocks, and then that led me into wanting to day trade in the options market. The options market is a different section of the stock market, where you basically buy contracts, and to me, it's almost like being a middleman. You hold niche shares, you have an agreement with this, and you take the profit of what's in the middle, so on and so forth. We can get into that in a different time. And that also will be something that we will introduce to the community once we go further into this investment community, so on and so forth. So after many trials and tribulations, joining group after group, I was introduced to the futures market. And being introduced to the futures market, the one thing that really sparked my interest was being able to trade 23 hours a day. 23 hours a day. The futures market closes at 5 p.m. It only closes for 1 hour, and it opens again at 6 p.m. Monday through Friday. Well, Sunday through Friday, right? So, being in that space, I'm always thirsty for knowledge. I'm always looking to learn more. So I started to seek more knowledge. I set out on my quest. I ended up hiring a mentor, and from that mentor, I gained a foundation of the market and day trading. From that mentorship, I also ventured out and started to gain more knowledge from multiple sources, and now I can successfully say that I can apply what I know to these markets. And I'll let Lou go ahead and tell his story.
Yeah, for sure. So similar story for me as well. But I went to UMass Boston. I got a master's, and just being in school, I got a lot of exposure to financial markets. And I have a couple of friends who are actually institutional investors. But at that time, when I first met them, I didn't even understand that you could be an intraday trader. For me, it was more about, at that time, okay, being a long-term investor, putting your money in buying whole stocks and dividends, and creating wealth that way. But because of the exposure I have and meeting other people, I was able to figure out that you can actually be in the markets intraday, where I can actually generate an income for myself intraday, as well as doing long-term investing. So again, similar story to crypto, where I was in many different groups, taking losses, taking wins, not really understanding how I'm doing it. And I basically just tried to figure out how to do it. I hired mentors and got more knowledge of what I needed to do, learn different strategies, and just have been applying that, and been successful ever since. And again, it's a rocky road, but once you understand exactly risk management and discipline, you can generate a an income for yourself and be okay.
Cool. All right, so that was our introduction. Anything else you want to add, bro?
No, I mean, for me, also for this group, we trying to be able to help other people do the same thing. Help other people generate, either if it's going to be, an additional source of income, or if it's going to be your main source of income. I mean, anything is possible in this market. Just got to have a right plan, right strategy, and do exactly what you say you're going to do.
Absolutely. All right. So moving forward, the overview of what this community, and because we are mentors and what we plan to mentor people who are interested in this market on, and I'm gonna just read it straight from the slide. The Futures Connect Mentorship is a comprehensive training course designed to help traders of all levels achieve their financial goals through futures trading. The mentorship is taught by experienced traders who have a proven track record of success in this industry. Throughout the mentorship, the mentees will learn the ins and outs of futures trading, including technical analysis, risk management, and strategy development. Mentees will also have access to live trading sessions with their mentors, where you can see us trade live right there on the screen during Zoom, so on and so forth. So also, there are many benefits of trading the futures market, including the potential for significant profits because of leverage and the ability to trade nearly 24 hours a day, actually 23 hours a day. Additionally, the mentorship offers the opportunity to learn from experienced traders, also network with other traders, and gain a deeper understanding of the financial markets. Whether you are an experienced trader looking to improve your skills or a beginner just starting out, the Futures Connect mentorship can help you achieve your financial goals with personalized attention from experienced mentors and a comprehensive curriculum. You will be well on your way to success in the futures market. All right, so what is this? Is this me?
I'll take over.
Okay.
So yeah, the main reason why people are here trying to understand futures market. So what is the futures market? It's basically it's a market where you trade derivative financial contracts, and those contracts, they're associated to an underlying asset, which is physical commodities or financial instruments. And we're talking S&P 500 futures, NASDAQ futures, lumber, cattle. You can trade palladium, you can trade silver, you can trade there's a variety of different instruments you can trade in the futures market. And then so when it comes to the futures market, some of the pros is it's a centralized price transparency. There's more reliable price action, and it's well regulated. Every futures broker, they send their customers' orders to the CME, which is the Chicago Mercantile Exchange, and it's virtually no spread. And that's because the brokers, they can't manipulate the market, unlike in Forex, where, and I'll get into that a little bit later, but in the Forex market, it's unregulated, and so the brokers they have the ability to create different spreads and manipulate the market. So I know there are some people that are coming from the Forex market. And I know, and speaking to some previous Forex traders that have come into the group, they've explained that there are times when they enter the market, they'll go into any other position that they're in, and they'll notice that they're immediately down, $100 or, 150 or whatever the case is, depending on the position size they're in. And those spreads happen because the market is unregulated. And so the brokers are able to manipulate the pricing. And yeah, so when it comes to the futures market and any financial markets, whatever the case is, there are risks, right? And with the futures market, it's high leverage. So essentially, leverage allows you to commit a small amount of capital to trade a large asset. And you can enter and exit as many times as you want throughout the day because it's highly liquid. So which makes it easy to go on tilt. I'm not sure if anyone knows what that means to go on tilt, but it's essentially, when you get outside yourself, when you maybe not be having the best day, and because the market is highly liquid, you're entering and exiting the market, not following your plan, and just doing all types of things that you shouldn't be doing. And also, when it comes to futures, it's not as customizable for partial profits. And what I mean by that is, in Forex, you can take off a percentage of a contract, right? And you can take off, 0.1 of a lot. In futures, you can do partials, but again, we'll go over that, as we continue to show you how to navigate the markets and on the brokerage as well. Let me see. I think someone just has a question right now, so I guess I'll answer that right now. Does going slow and longer create a better portfolio? Does going slow and longer create a better portfolio?
I mean, that's more of like
More interesting, like long term.
long-term investing.
Yeah. You mind explaining that question?
So from what I
Oh,
think,
she says yes.
yeah. So I think the purpose of it is, so this is intraday trading, right? This is not like buying Apple and holding it for 6 months to a year, hoping that it goes higher in value, so on and so forth. This is we literally you can literally take 1,000 trades a day. I don't recommend it, but you can literally just be in and out in seconds taking trades, or you can, depending on how the market movement is, how fluid it is, how much volume there is, you can be in a trade anywhere from 5 seconds to 2-3 hours, depending on how the market is moving. So yeah, it's not about the pace of the trades that you take. It's more so making sure you pick the right spot and making sure you in flow with the market, moving with the trend. And there's also other kind of aspects to it that you have to pay attention to if you want to have the highest probability of having a successful trade. Now, one thing you have to understand is that this game comes with losses. And a lot of people like to show all of the big wins so they can draw people in, but they don't show you what they risked for that win, and they also don't show you what how many losses they've had, so on and so forth. And that's where I feel like we will excel at, because I'm transparent, Lou's transparent. We want you to know, like, this is an industry where you have to be a good loser. You have to be a good loser, because if you're not a good loser, those small losses will take you out the game.
Yep.
And
if you're not a good loser,
I hope that
your
explains
last
it.
loss will be your last loss.
Yeah.
Yep.
Yep.
Yep. And also, and to add to that too, does it, create a better portfolio? I wouldn't necessarily say that long-term investing is better than futures intraday trading, or futures intraday trading is better than long-term investing. It's different, like there are a lot of wealthy people who they have real estate, they have digital real estate, they have long-term portfolio, they have another business. It's just, that's all that is. It's just a different avenue to create revenue for yourself. And and to harp on what Crypto said, gotta be a good player in this game. You have to be. So yeah, we can go to the next slide. So when it comes to trading the futures market, how do you trade them? There's a couple ways. You can do your personal capital, and you can also do prop firms. For any beginners, I don't recommend doing your personal capital. I would recommend being on the prop firm side, but instead of me even giving you that recommendation, I'm going to explain to you how it is if you trade personal capital. And we're also going to explain how it is when you do prop firms. All right, so.
And also to add, you see these logos up here. These are some of the top prop firms in the industry right now that people are utilizing their capital so they can bring in capital as well. So to go to the fact of when you're not using your own capital, the name of the game is OPM, other people's money. What better way for you to gain success or for you to build capital than to use other people's money? If they're going to let you use their money, why not use their money opposed to you risking your own money? So I'm going to go to the next slide. Personal capital. Go ahead, Lou.
All right. So when it comes to using personal capital, there are advantages to using your personal capital. If you're an experienced trader and you know exactly what you're doing, you understand the markets, you understand what you're doing. So when it comes to personal capital, there are some tax advantages, and the 60-40 is pretty simple. What you would do is for tax purposes, for your profits, 60% of your profits would be taxed at long-term capital gains rates, and 40% of your profits would be taxed at short-term capital gains rates. So that is one of the advantages of using your own personal capital. And then there's also going to be margin requirements as well. So in terms of margin requirements, there's two types of margin. There's two of the main ones. There's initial and maintenance margin. Initial margin is essentially the amount of funds required to actually enter a position. And maintenance margin is usually a bit lower than the initial margin, but it's the amount of funds that you need to be able to actually stay in the position. And it's different for intraday and overnight. And again, I'll get into that a little bit later. But what happens if your balance falls below the maintenance margin and you're in a position? You get a margin call, right? And so I'm not sure if anybody's seen the movie, but they do a pretty good job of doing a depiction of what that is. But it's basically when your brokerage demands you put more money into your account, or they're going to close your position. So a lot of times you'll see with people, when they're using their personal capital, they may be in a position and the market is going so far against them. And remember, futures market is on leverage. So you actually can lose more money than you put in. And when you're in that situation, that's when you'll get a margin call. Okay? You go next slide. And when it comes to, so what I'm gonna do is I'm basically gonna give you guys a couple examples of where you can trade futures, and I'm do a quick comparison of this more just the margin requirements and specifically for futures brokers as well. So you got TD Ameritrade, you can trade on there. If you want to get into an ES contract, the maintenance margin for that is 12,000. And there's also really high commissions for futures. Next slide.
What's the ES?
Next slide.
Oh, okay.
So there's also another broker called TradeStation. They have their listed out intraday and maintenance margin and initial margin and overnight margin, and you can see how much money you actually have to have in order to enter positions. And again, we're talking personal capital, and we're gonna get into the prop firm situation in a little bit, but I just want to give you guys a quick explanation of what it takes to be using your personal capital. So you can see here we have, if you want to get into the ES, which is the futures contract for the S&P 500, to enter a position, it's $1,298. To stay in the position, it's $1,168. So basically what that means is you have to have in your account almost $1,300. In order to stay in that position, you cannot, while you're in that position, you cannot go down more than 130. If you go down about $130, you will be considered in the area of getting a margin call. So that's just for the ES, and then you can see the different numbers for the other markets. Next slide. And again, this is just quick numbers to show you again what it is with different brokers if you want to trade your own money. This is how much money you have to have in the market. If you want to trade the ES here, $400 to get in, you have to have about 11,800 to stay in the trade. This is AMP futures. Next one, we got Iron Beam. That's another platform, another broker. Same thing here, 511,550, and you can see all the numbers on the slide. And then go ahead. This is and then for again, there are a lot of people coming from the Forex market, and this is just the jargon that's just a little bit different. So I know people in the Forex market, they talk about lots and pips. In the futures market, it's contracts and ticks. Next slide. Got that correct?
Oh, there's me? Oh, my bad. All right, so to give you guys an understanding of how the money is being made in these markets, right? Like you said, from the Forex side, for those of you all who trade Forex, the jargon over there is pips, pipettes, stuff like that. I'm not too familiar with the Forex side, but I am familiar about how they call it. Over here on the future side, we call it points and ticks. So a point is the smallest unit price. The smallest unit price can move to the left of the decimal point, right? This decimal point here, anything over here, if these numbers fluctuate, it'll be a point. If this 18,501 goes to 18,502, that is 1 point. Now, a tick is the smallest unit price that can move to the right of the decimal point. This decimal point here, to the right of it, are ticks. If this goes by, it'll go from 00 to 25 to 50 to 75 back to 00, which you can kind of correlate it to a dollar. There's 4 quarters in a dollar. There's 4 ticks in 1 point. So if this goes to 00 moving up, this will go to 18,502, which means that it moved 1 point. From this point here, it would move 3 ticks, which will make this go to 18,502. If this was 00, it would have to move 4 ticks to make this go up 1 point. The same as 4 quarters in a dollar. So that's the kind of correlation in that. So in the NQ and the ES, there are 4 ticks in each point, like I explained before, right? It is important to understand that each commodity is different. It has different tick sizes and value. We have a website that we would typically go to called Daniel's Futures Connect. No, what is it? Daniel's Futures. Daniel's Futures is it's a tool that can be used for you to understand what commodity that you're trading and how much their tick value is. So let's just say you have here the ES, which is the S&P 500. We got the NQ, which is the E-mini NASDAQ. You have RTY, which is the Russell 2000. You have the YM, which is the Dow Jones Industrial. You have CL, which is light crude oil. You have GC, which is gold, and you have 6E, which is the euro. This is just a small section of the of certain instruments that you can trade in the futures market, right? So the S&P 500 and the NASDAQ, they move by ticks, right? 0.25, 0.50, 0.75, and then back to 00. For the ES, it's 12.50 per tick. For the NASDAQ, it's $5 per tick. Now, when you get into RTY, YM, CL, which is oil, gold, which is 0.10, as you can see, these commodities are different. So RTY is $5 per tick, which means that this will have to go up to 20, 30, 40, 50. So it's almost like it moves by, let's just say, dimes. Each dime is technically a $5 movement. And the YM moves by points only. The YM doesn't move by ticks. It moves by points only. So the YM it's almost like $1. The YM doesn't have quarters. It's just 1, 2, 3, 4, 5. And each movement in the YM is $5, right? We have oil. Oil moves by pennies to correlate it. It moves by pennies. So each incremental move in oil is $10. So once this goes up to 0.02, that's a $10 move, so on and so forth. Gold, it moves by dimes as well, same as RTY, but each incremental move in gold is $10. And then we have 6E. That's broken down into multi-fractions. So each move on 6E, which is the euro, is that the euro dollar, right? Yeah, the euro dollar. And that's $6.25 per incremental move. Now, keep in mind, these are mini contracts, right? There's something called micro contracts, which I'll get into on the next slide. Actually, no. Okay, so this is basically an explanation of what I just said. You got this. You got if the 6E moves one tick, as you can see here, 1.08420, and it moves to 1.08425. That's $6.25 value of movement in that instrument.
Also, I think I'm seeing in the chat, we might be going too fast because people trying to take notes. So yeah, we'll go ahead. We'll slow it down for sure, just so people can.
Okay, my apologies. My apologies. So I'm gonna stop right here. Is there any questions?
Yeah, is it possible if I could see that last slide that you just went by real quick?
Yes, sir. This here?
Yes, sir. Thank you.
No problem.
I'm good.
Okay. Interesting. Well, it looks like a penny is really $10. Yeah. Yep. All right. So this is kind of an explanation for people who trade the Forex market and how it equates to the futures market. In the Forex market, you have a derivative of the NASDAQ, but they call it the US 100 or the NAS 100 in Forex. Let me see here. Hold on 1 second. 23.
Yep, this is you.
Okay. So you have the US 100 or NAS 100 over here in futures. We call it the NQ. You have the US 500. Over here, we call it the ES. A lot of people trade they call it the U30. I hear that a lot, U30. That's the US 30 in Forex. Over here, we call it YM. Or as one of our good friends call it, Young Money. Shout out to Ty. We also have XAU, USD, and Forex. But over here, we call it GC, which is gold coins. And I'll let Lou take the next one. Is that me or you? Yeah, you 2430.
Yep. So there are also, in the futures market, we have currency equivalents. So basically the same thing. So if you trade in the euro, that's 6E, British pound, that's 6B, Japanese yen, 6J, Canadian dollar, 6C, Australian dollar, 6A. And that's correlated. You can see with the letters E, B, J, C, and A. So it's fairly easy to distinguish which market is which. Next slide. Let's see here. So, all right. So when it comes to trading in the futures market, there are contract months and years that you have to be aware of, right? So depending on the broker, you're gonna see it listed differently. So if you're on NinjaTrader, or if you're on TradingView or TraderVate, or again, these are all different brokers that we'll get into it in a few. But if you see listed out ESH 2024, ES is the instrument, H is the contract month, and obviously 2024 is the year. And you'll be able to distinguish for these based on this chart below here, which is, you see March is H, June is M, September U, December is Z. What's neat in NinjaTrader, which is again our primary platform that we use, you can just type in, 06-24 or 09-24, and it'll just pop up the right contract month for you. And so it's the same thing for NQ. So if you're trading right now in the futures market, the March contract has already expired. It expired last week or 2 weeks ago. We're on the June contract right now. And if you see it listed, it'll be NQM 2024. But again, when we're trading NASDAQ and you see it on your chart on the top left, it'll be indicated by NQ 0624. And also, when we're getting around the time to actually roll over contracts, if you really need to know which contract has the most volume, you can always check on NinjaTrader, bar chart, CME. Those are different places, different websites you can look to see open interest, and you can also see daily volume at those places. Go ahead, next slide. So when it comes to position sizing, this is going to be paramount for you as a trader to understand what you're actually going to be, looking to risk and how to be positioned correctly in the market. So how do you calculate how many contracts you should take? Well, what you want to do is you want to say, all right, the amount of money you want to risk divided by the contract value per point divided by your points of risk, which will be your stop loss. Quick example, if you want to risk $800 on a 20-point stop loss in the NQ, it'll behoove you to only trade 2 contracts. And the reason why is this: it's $800 of dollars you want to risk. For the contract value per point, it's $20 per point in the NASDAQ. And points of risk, if your stop loss is going to be 20 points away, you just divide that number by 20 and you get 2 contracts. Or that'll be 20 contracts in MNQ. MNQ is the micro version of the NQ. So we have NQ is E-mini NASDAQ. MNQ is the micro E-mini NASDAQ. And that's 1/10 of the leverage. So, and again, we'll get into that in a little bit. Next slide. So for me, I think for most beginners that are getting into the markets, micros should be what I recommend you trade, right? You do not have to trade the minis. You definitely can. I'm not saying to not ever trade the minis, but as a beginner, as you're a new trader who is looking to get their psychology right, and they're looking to get their discipline correct and find the strategy and learn your strategy, I would recommend trading the micros. One ES contract is worth the same as 10 MES contract. That would be the same leverage. So one ES has the same leverage as 10 MES, and one NASDAQ has the same leverage as 10 MNQs. Okay. See. Go ahead, next slide. Perfect. So I want to give you guys just an example of what I mean by micros matter. So the ES, a 1% move in the ES is approximately 50 points, right? So let's say you caught a 10-point move in the MES, right? Well, and if your position size, if you have 5 micros, so again, if one mini is worth 10 micros, well, if you have 5 micros, that would be half of a mini. Someone have a question? I just saw a hand raise. And I definitely want to make sure, and this can be an interactive process. We want to make sure that we're answering questions, and as we're moving through, we want to make sure that everyone actually understands exactly what we're talking about. So, any questions so far, please let me know. And feel free to come
Also,
up.
keep in mind that this is just an overview of the market, an overview of the stuff that we kind of already know, and it's in our minds, and we've been doing this day in and day out for the last 4 years. So you might not get it right now, but if you're willing to put the time in to learn it, it's not hard. The biggest thing about this market is not even the market. As the great Eric Thomas says, you owe you, but also by you owing you is you versus you. So you can get over yourself. You have to figure out a way to get over yourself and your thinking, because the market is gonna expose a lot of things about yourself that you don't know, that you will struggle with, like fear, greed, being consistent, discipline, so on and so forth. So, like you said, if anybody got any questions, feel free to ask them now. If not, we can go ahead and keep moving forward.
Yep. So position sizing, and for this example, we're gonna be just talking about micros for now. So you got 5 micros, right? And keep in mind, for the micros, if you have one MES contract, that's $5 per point, right? So if you caught a 10-point move and you are trading 5 micros, right? That's $250. So if the ES and the MES moves 50 points and you caught just a 20% move, that's $250, right? And again, that's per account. If you have multiple accounts, it could be $250 per the amount of accounts you have. Now let's talk about the NASDAQ. NASDAQ, about a 1% move in the NQ is about 180 points, right? So say you caught a 20% move in the NASDAQ, which is about 40 points, right? Say you caught a 20% move, or around a 20% move. If you have 5 MNQ contracts, and with the MNQ is $2 per point per contract. So if you have 5 MNQs and you caught that for 40 points, that'll be a $400 move. And again, this is just micros. If you were listening to me during the week, I mentioned that you don't need to go get $150 million a day. You don't need to do that. It's first of all, it's unrealistic, right? And number two, it just causes a lot of mental stress and mental capital depletion. And that type of thing can linger on into your, it can potentially linger on into your trading career. So that's why in the beginning, that's why we are stressing so much in the beginning. It's okay to take it slow. It is okay. It is a learning process. It is okay to take it slow. You are not going to get this overnight. That's not something that we're going to tell you. I'm never going to tell you you're going to get this overnight. There are people out there that that's what they will say. You can learn this quickly. You can do it's a process, and it's okay. It is okay. All right, slide 29.
Yeah. So let me add to that real quick.
So
It's definitely all about your mindset and how you think about things. I'm going to always compare this and what we do on an everyday basis to a 9-to-5 job. I've had plenty of jobs that I didn't care about what I had to learn to start that job. I just knew that I wanted to make the money because 9 times out of 10, somebody told me like, hey man, what's the name of them hiring? They paying $15 an hour. I'm like, I'm about to go put in the app. I ain't say, well, what you got to do to get that $15 an hour? The mindset is I'm willing to go sell 8 hours or more of my life to make this. I'm basically, in my mind, an hour of my day in my life is only worth $15, right? So, like I say, I'm always going to equate that to trading because it's like, okay, even if you're the type of person who went to school, that if you say, hey, I want to learn how to do this, I want to be this, I want to be a doctor, I want to be a graphic designer, I want to be this, I want to be that. You'll go to school for 2 to 4 years for free and come out owing a lot of money to learn a skill that you wanted to learn. So it's like changing your mindset to say, okay, well, in this industry, it's more lucrative, but I got to put in the same amount of time as I would for a job I want to learn because it's paying a lot of money, or a skill I want to learn and I'm going to school for that I'm gonna have to owe a lot of money for. I've paid a lot of tuition into this game, and it's substantially less than I would have paid for college. But it's way more lucrative than what I would have got with a degree. Just my perspective and my opinion. So I definitely wanted to add that in there too, because some people may not be able to see it until you compare it to something that you do on a daily basis and something that you've been taught to say, hey, okay, this is normal life. So yeah, I'm gonna go ahead and digress a little bit. Next slide.
Yep. So again, going back to one of the original and earliest slides, how we talked about 2 ways of trading the market. I covered personal capital. Now we're going to get more into the prop firm side and, dealing with funding companies. And so with these prop firms, that same leverage that you needed for personal capital, they give it to you. These prop firms give you the leverage, right? You're not risking your own portfolio. There is a trade-off though. The trade-off is you need to actually pass an evaluation and there are more rules. But I would say for me, this is just a much more cheaper option for people who don't have enough money and cannot fund their own account, right? This is just the other way of doing it. And now we're going to get into how these prop firms work. So the way they work is you essentially, you find a prop firm that you like, you purchase an evaluation account, you reach the profit goal without hitting the max drawdown and following the rules. and you have to understand the different types of drawdowns, right? So I'm gonna get into the first drawdown, which is the daily drawdown, right? Daily drawdown, go next slide. So the daily drawdown, it calculates, it's calculated from your balance start of the day, right? You can't trade for the rest of the day when you hit that drawdown. And so this is just a quick example of that same situation. So example, say you have an account balance and for that day, you started at 52,000. But during the day, you lost 1,000 and now your balance is 51,000. Depending on the prop firm, a couple of things can happen. Your account can either be locked for the day, where you can't take any more trades, but you just have to come back the next day and trade, or they'll actually close down your evaluation. And if you want to continue trading with an evaluation, you're gonna have to do another one. And again, that depends on the firm. And a couple of so for the account being locked for the day, that's top step. And them actually closing out your evaluation, that's from a firm called Elite Trader Funding. All right. So yeah, I would say read the rules, but you can go ahead with this one.
Okay, yeah, so it's very important that those of you all who are familiar with the prop firm game, that you read the rules and the frequently asked questions for each company, because they can vary and they can differ. So for Apex Trader Funding is the prop firm, is my primary prop firm. It's the prop firm that, well, I'm gonna say this. I'm always gonna tell the story, right? Back in 2020, when we started this process, as far as, you know, trading and so on and so forth, around the times where I think it was around the time when me and Lou kind of first met, and we was doing this trading stuff almost every day. I still had a t-shirt business that I was doing. I put a couple $1,000. I put $7,000 into the market, right? My mindset was, I'm about to turn this 7,000 into 7 million in 10 days. I had no strategy. I didn't have nothing to go off of, except for I knew that I've seen people online make money in the stock market, and I wanted to do the same thing. Single father of 3 kids, had the household to uphold, and I knew that I wanted to change my family dynamic, and this was an opportunity for me to do so, outside of being in the streets, risking my life. So I told Lou what I was about to do. He said, "Man, listen, why don't you come with this prop firm?" I didn't know anything about it. And I'm like, yeah, I get with the prop firm once I turn this 7,000 into 1,700 million, right? 3-4 days later, gone. And I'm like, man, what was that? What was that company he was talking about again? And from there, and that was One Up Trader was the first prop firm that we started with. And then we got with our mentor, our previous mentor, and he introduced us to Apex. And I'm saying this because this example here came from Apex. I can honestly say that I was in a gambling mindset then, just trying to gamble and flip this, flip that, so on and so forth, right? So to get back into what the trailing drawdown is, right? So if you start, your starting balance is $50,000, right? Your threshold will be 47,500, which means that you only have 2,500 to work with. The reason why you see a big number as far as the account balance is, remember when Lou said that in order to trade these markets, you need to have a certain amount of money in your account just sitting there, right? You need to have a certain amount of money in your account if you're trading your real money, your own money. So what the prop firm does is they consume that risk and say, hey, listen, okay, we're going to give you $50,000 worth of capital, but if you lose 2,500, you're done, right? So you starting off with $50,000. Let's say you make $500 for your first trade and you close that trade out, you make $500. Your balance is going to be 50,500. Now, keep in mind the keyword trailing drawdown. So you start off with you got 2,500 to work with. If you go up $500, you still have $2,500 to work with, but your trailing threshold moved up from 47,500 to 48,000, if that makes sense. Before I move forward, do anybody have any questions about that? All right, so now next, if you enter a trade and then you get up to 52,000, but you don't close the trade until your balance is at 51,000, which means that you're in a trade, you can see your account balance touch 52,000, but then the market starts to come back down and you start to see your profit dwindle down to 51,000. Then your threshold is going to be 49,500 because you did not take that $2,000 worth of profit and you let the trade come back down to you only being up 51,000, right? So the trailing drawdown, it calculates at the highest level of where you were at in a trade, no matter if you take the profit or you let it pull back. So it's kind of like it's going against you. And the reason for this is because these companies know, and there's some companies that do intraday trailing drawdown, and some companies that do end of day trailing drawdown, which means that it's not being counted against you until the end of the day, right? But the mindset of this is, if you really think about it, these companies are teaching you how to be a consistently profitable trader by coming in, taking your profits, and leaving. That's it. Now, of course, you have industries like the gambling industry, which I always stress this a lot. People like to say trading is gambling, but they don't understand that there are professional gamblers. People who go to the casino professionally and make a living off of risking capital and trying to make capital. So in our community, we kind of look at it as a bad thing, but to me, it can't be no worse than you risking 8 hours of your life from your family. That's worth way more than what you would risk in a casino, for me. So these prop firm companies, they want you to be a consistently profitable trader, but they know that there are some people who are looking to gamble. So you have to make a decision on which side of the coin do you want to be on. Do you want to be a consistently profitable trader, or do you want to get one big windfall and then next thing you know, you want a natural high because you done made this money and now you can't make the money again, and now you looking at it like, oh, I need to hurry up and make this money again because I know I can do it. I did it before. The next thing you know, you out the game talking about the stock market is a gamble. You on the sidelines talking about, man, I'll never do it again because I lost all of this money. Instead of taking accountability, saying, I didn't sit down and really learn how to do this, because obviously the market's been here forever. I guarantee you there's a lot of people on this call that got iPhones. Who owns iPhone? Apple. Where's Apple at? On the stock market. Where? Under the NASDAQ, under the S&P 500. We got cars. Cars is made by GM. You got Teslas. You got everything that we do on a daily basis, everything that we consume, everything that we use on a daily basis, there's a company behind it, and that company is in the stock market. So just keep that in mind, you know, when you have the concept of the stock market or the fear of the stock market, because I know in our community, the only thing we know about the stock market is CDs, certificates and certificates and deposits. That's the only thing we know. There's a whole nother world to it, right? So to bring it back to the intraday trailing drawdown and these prop firms, they are literally teaching you, if you're willing to learn, to be a consistently profitable trader. The bonus of that, I think I already explained this. Okay. But before I get into this, the bonus of that and some of these prop firms is they allow you to have multiple accounts. The company that we trade with is Apex. They will allow you to have up to 20 accounts. Again, I'm always going to bring it back to the working class. That is the equivalent of going to work, working one job and getting paid for 20 of them. We would do that in a heartbeat. You mean to tell me that I can go work for this company and get paid as if I did it 20 times in one day? I will do that. It's the same thing. So if you put it into perspective, like he said, you don't need to go out and get $1,000, $1,500, $2,000, $4,000 a day in one account. My goal is $250 per account. Do you know how much $250 a day in just 5 accounts is for a year? That's 300. Is it 300 or $360,000? No, you don't need logins for each account. It's one login, multiple accounts. So I'm gonna ask anybody but a dead body, how many people in here can go to work and make $250 a day? I don't know everybody's lifestyle or their career or whatever, but the majority of people don't make that. I've never made $250 a day on any job. Unless I slaved for 12, 13 hours and made $250 a day. Right? So
let me answer that one question that he has. How do you do a single trade for each account? Well, there's a couple of ways you can do it, right? I do this and crypto does this too. You can trade all your accounts at once using software that actually connects all your accounts. We use a software called it's an add-on, and it's called Replicanto, and it allows you to choose one account as your leader, and then you can select all your accounts, a couple of accounts as your followers, and they would essentially take the same trades that your leader does. So all your follower accounts would be in the same trade as your leader. And so you would basically manage the trade just using your leader, right? So you can do it that way, or you can trade it individually, and that's called Replicanto. So the name of the company is, name of the company is Flowbots, and the name of the software that's their trade copier is called Replicanto.
yeah. So as an example,
and we'll get more into that later on as well. Go ahead,
just to give you an example, this is what I did yesterday. No, the market was closed yesterday. On the 28th, I posted this at 3:05 p.m. and I'm be honest, I'm very transparent when it comes to my wins and my losses. Cause I never want nobody to think all I do is win. I'm not DJ Khaled, right? Even though it sounds good. But I take losses as well. But to go into the concept of Replicanto, I trade out of my sim account, right? So when I take a trade out of my sim account, and as y'all can see, I trade live Monday through Friday. When you see me take a trade on the screen, you will see all of these light up. All of this gonna light up, and it's all gonna be in a trade, right? Now, sometimes I may go in singly, like I did this account and this account. I may go in a single account and trade it individually, but for the most part, I copy my trades into multiple accounts. So that allows me to say, hey, okay, I don't have to go in and get, like I say, $1,000. Oh, where my screen go? Where did it go? Hold on a second, y'all. Yeah, so I don't have to go in and get $1,000 per account, even though it's possible. But to soothe me in the stage where I'm at right now, I can go get $250 per account. I got right now, I got 2, 4, 6. I got 8 accounts. 250 times 8. That's a wonderful day. That's a great day. And then guess what? Sometimes, and shout out to brother Ben Next, he came and joined us when we was trading, and I took a wonderful trade, and you just see it happening right there. That was literally what, 3-4 minutes? 3-4 minutes, most 5. Sometimes we may be in the market for 5-6 hours. And it's cool because guess what? I still have my freedom to go and do whatever I need to do whenever I'm done. And then guess what? 2 weeks, everybody get, if you got a traditional job, you get paid every 2 weeks. We do too. If you're consistent and disciplined, you get paid every 2 weeks. So to keep it moving, so when you get to, this is how it works, right? With these companies, they want to know that you can trade. So what they do is they start you off with an evaluation, right? Now, depending on the discount that these companies is running, you may get 90% off, you may get 80% off, you may get 71% off, you may get 50% off the evaluation accounts. So the concept is to say, hey, okay, I'm going to go ahead and purchase this account because I think I'm a trader. I believe I can trade. So for me, I typically do 50K accounts, right? Your profit goal is 53,000. Once you hit 53,000, then you stop. So let's just put a little bit more color into it. If you get a 90% off sale on a 50K account, you may be paying like $16 for that account.
Yep.
Right? So then once you reach a profit target, it's time to go into a performance account, which is called a PA account. You pay $140 for that. Okay, $140 plus 16, that's $156. You just pay $156 for the potential to make unlimited funds if you can overcome you. If you can say, hey, I have a plan, I have a goal, I'm going to go in here, I'm going to make $250 per day until it's time for me to request a payout. Same thing as, what's that? What is that? $12.50 a week? It's $12.50 a week, right?
At what a day?
Huh?
At 250 a day?
250 a day.
Yep.
450 a week. That's 2,500 every 2 weeks.
Mhm.
You could pass an evaluation by just doing that in a little over 2 weeks. Now, for the 50K account, in order for you to get a payout or to qualify for a payout, you have to reach 52,600. Now, I just said $250 a day. You can reach 52.6 in 2 weeks in 1 day. And then you can say, hey, okay, I reached my withdrawal threshold. I want to request a payout. They say, okay, for your size account, you can request 2,000. Look at the risk to reward ratio. You just spent 156 and in 2 weeks later, a little over 2 weeks later, you made $2,000.
And Brother Ben, let me answer his question real quick. I see that Brother Ben, he asked, is it every 2 weeks, even if it's your own money? No. So for me, I trade personal capital as well as prop firms. So if you're trading in your brokerage account, you can withdraw funds every day. That's your money. It's kind of like if you're trading options on Robinhood, or if you're trading options on Thinkorswim, TD Ameritrade, E-Trade, any of those platforms. That's your own money. All you do have to wait for is the funds to settle. So you just have to wait for the funds to settle. And I think it's it's T+1 trading days or whatever the case is. I think they actually lowered it. But yeah, if you have your own capital, you don't have to wait 2 weeks. You just have to wait for the funds to settle. It's kind of like your own personal bank account.
Yep. So, but if you get to the point where you have multiple accounts and you're consistently doing the same thing every day, because again, I'm gonna put it into a perspective of a 9-to-5 worker. These jobs pay us to focus on their process, and then we get paid 2 weeks later. There's nothing different here. There is one difference. You have to make your own process and focus on your own process in order for you to pay yourself in 2 weeks. There's nobody over you. There's nobody under you, beside you, in front of you, behind you. It's just you. The jobs that we go to, they take care of all of that for us. For we don't have to worry about it. We just got to come to work and get paid every day, or paid in 2 weeks. But we got to focus on their process. Here, you focus on your own process. You create your own process. You focus on that. You do that every day, and you get paid. Now, you got funding partners who do a profit split. I'm going to speak to Apex because that's who I've been with the most, and that's who's paid me out the most. They do a 90-10 profit split, which means that in one account, if I pull up to $25,000, anything after $25,000, they get 10% of. I don't know anybody who wouldn't be cool with that, but that's how they work, right? So just to give you guys a some, I don't know what you call it, testimonial or payout proof, but these are one of the 3 top firms that we use. As you can see, me here, and this was just on March 21st. And then we have Lou here. He got his payout. This is my payout. This is a reoccurring thing. But I don't want you to look at it as this is going to be automatic, because it may be some times where you miss a payout. It may be some times where you get to a point where you're close to a payout and you feel in a certain kind of way, and you like, I'm close, I'm close, I'm close. But you know what? Sometimes those emotions get there. I'm not superhuman. I don't want to be looked at as a superhuman because I have emotions as well. What I will say is, and I'm gonna be honest with y'all, I got my mother here. I got a couple of family members here, and my mother is one of the people who I've talked to the most about, outside of Lou, about these emotions that I be having going through trading. But I don't stop. I don't let those emotions stop me. I just learn how to manage them, because you're not gonna get rid of them. Don't let nobody tell you that you need to be emotionless. That's like saying I'm going to stop using something that God gave me. No, you can't do that. You telling God, listen, you shouldn't have gave me this. I don't need this right now. I'm not going to use this. No, what you do is you learn how to manage it. That's the probably the best advice I can give you, because I've been told before that I need to have no emotions. It's impossible. You're basically calling yourself a superhuman. No, you need to learn how to manage your emotions. So, this is we're getting close to the end of this portion of this webinar. So to end this off, I was interviewed by Apex Trader Funding because of me reaching a certain payout threshold. If y'all want to check it out, that's me. That's I forgot his name, but Bacon something. I forgot his name. But yeah, this is my interview on Apex Trader Funding. That's me, as you can see. Kind of look like me. He's a kind of handsome kind of guy right there. Where can I watch where can I watch the replay? The replay of what? This
Yeah,
my
this
interview?
Zoom. No, this Zoom, because I've been in and out. I'm currently working, so I'm just trying to watch the replay so I can take more notes. Because I see
It's
it's
gonna be,
recorded. I don't know if y'all gonna have it back up.
yeah, it's definitely recorded. It will be in the Discord. If you guys are in the Discord, it will be in there once I get it chopped up and stuff like that. Because this is the first half of this webinar. For the people who want to follow us on social media, we do have social media. It's pretty much the Futures Connect everything. Not as active as we should be, but you know, the motion will come. But so I'm going to open the floor up for anybody who has any questions, any concerns, anything that I can answer. Feel free to unmute your mic or raise your hand, whatever you want to do.
Please don't be afraid to, if you have questions, and if anything was confusing, we would love to answer the questions for sure.
You got